Welcome everyone, it's me Juno again, and finally today I'm bringing you guys the StatMap Unicorn video where we will go over the model and behind the ideas released on the StatMap Unicorn document. We'll go over the basics of the Unicorn entry function, what is the StatMap and how do I use it with the Unicorn. First of all, we're gonna see what's the Unicorn entry function in the most basic terms. So what's a unicorn? The first component of the unicorn is the breaker. A breaker block is a failed order block that leads to structural changes and liquidity shifts. It represents a price range that was expected to as a support or resistance, but gets disrespected, and then serves as support for the opposite directional movement. Then, for the second component, we have the fair value gap. A fair value gap refers to an area in price delivery that lacks liquidity. It's essentially a price range where one side of the market hasn't fully participated in trading, leaving an imbalance behind. Finally, when we combine these two concepts, we end up having the unicorn. Basically, the unicorn is the alignment of these two concepts, so we want to see a breaker with a fair value gap overlapping. Now, we are going to talk about the StatMap indicator. The Open High-Low Close StatMap indicator is a tool that uses statistical data to project average manipulation and distribution levels on our charts. With that information, we can use these levels as potential reversal zones, where we can start looking for opportunities to engage with the market. Let's see how this works. In the StatMap, there are 4 key levels to keep an eye on. Let's take a look at how the StatMap looks. As we said, we have 4 key levels. 2 manipulation levels, the plus manipulation and minus manipulation, and the plus distribution and minus distribution. So, what can we expect from these levels? First, we want to see price reach one of these StatMap levels and see how price reacts to it. Once we see some sort of reaction, then we want to start considering engaging with the market by looking for our entry function, in this case the unicorn. Based on that idea, we basically want to consider these StatMap levels as a statistical high timeframe points of interest and only looking to engage when one of these levels gets reached. I try to simplify things as much as possible, so over time I started seeing the StatMap as ranges. I would want to see price reach one of the range extremes to start looking into positions. Let's visually see how these ranges would look like within the StatMap and what we can expect from them. Let's check out the first range. Manipulation range. This is the main and initial range, as it's the first one where price starts trading, and it's formed by 2 manipulation levels, with the minus manipulation level as the top of the range and the plus manipulation level as the bottom one. Then we have 2 distribution ranges. The plus distribution range is the upper range, which we trade in when price expands higher. It's formed by the minus manipulation as the bottom part and the plus distribution as the upper part. And then we have the minus distribution range. This is the lower range, which we trade in when price expands lower. It's formed by the plus manipulation as the upper part and the minus distribution as the lower part. Now, let's check what we can expect from these 2 types of ranges. As we said before, price starts trading inside the manipulation range, or also called main range. This main range is the one where price starts trading within the StatMap. For me, it's the easiest one to trade since both levels of the range are acting as their primary roles. We will see the roles theory further on the video. The minus manipulation level serves as a resistance, preventing price from going higher, and the plus manipulation acts as support, holding price from falling below. So, we want to wait for price to reach one of these 2 levels and wait for reaction off of them. As we said, we want to see price reach one of these manipulation levels, but once price starts trading above or below the main range, and finding consolidation inside one of the upper or lower ranges, then we want to shift focus and switch roles for the manipulation range. If it was acting as support, now it does as resistance and vice versa. So, let's dive a bit deeper into the switch roles theory. The premise is that when price reacts off of a stat map level, these levels can act as either resistance or support, depending on whether prices traded long enough above or below them. Let's see two examples of switch role levels. In scenario 1, we have price reaching the stat map level and finding support from it, acting as its intended primary role. And in scenario 2, we have price reaching the stat map level, but instead of finding support, price goes below the level. After trading below the level, price attempts to go back above it, but now that level is not acting as support, as that was its primary role, and now is acting as resistance, driving price lower. Now, going back to the stat map, we can apply the in-range theory to it by dividing the stat map into premium and discount zones. Premium refers to a price level that is considered high within a given trading range. When the market is in a premium, it is seen as overvalued, while discount is the opposite, referring to a price level that is considered low within the trading range. In a discount market, the price is seen as undervalued. So, based on that, we ideally want to see longs at discount and shorts at premium. But from the first zone in the main range to the last one in the distribution range, there's still plenty of room for price to move. In this chart, we can see how reversals are most likely to happen in discount zones, while continuation moves are most likely found in premium zones within switch role levels. We can see how price first taps into plus manipulation, then reverses up and starts trading above the main range, so price finds itself into distribution range, and minus manipulation that was acting as resistance now acts as support, where we can find a continuation opportunity to maximum premium. Now that we know how we can see the stat map as ranges, we are going to cover the basics of range trading in order to participate with the market once price is reacting from a stat map level. The key component when trading ranges is identifying deviations from the range. A deviation happens when price moves beyond the range boundaries. Moving below the range low and trading back into the range is a range low deviation, and moving above the range high and trading back into the range is a range high deviation. As we said, we want to see price deviate from one of the stat map levels and see it trade back into the range. That's when we want to look for our entry function and look for the other side of the range as our maximum take profit expectation. But what happens when we start trading out of the current range? How do we start interacting with the new range? Once price finds acceptance into the new range, we want to shift focus onto the new range and we look for the same scenario. A price deviation at the level that has now switched roles, followed by price returning into the range, providing us with an opportunity to take a position. In this example, we have a deviation from the plus manipulation range, then price trading back up, but this time above the minus manipulation range. After a consolidation inside the new range, we see price reacting from the minus manipulation range, that now acts as support, driving price higher into the plus distribution level. That same principle applies for the opposite side of the stat map. In a bearish scenario, we look for price deviations at the level that switched roles, followed by a return to the range for potential entries. Now, let's combine everything we have covered so far into a full example, from finding deviations from the range to spotting our entry function for us to participate. First of all, we want to see a new stat map form. We want to see price trading inside the main range formed by the two manipulation levels. Now, all we have to do is wait for price to trade into one of these levels. On step 2, we want to observe price tapping into one of the stat map levels and deviating from the range and trading back after. That's when we're going to start looking for potential entry opportunities. On step 3, when we can confirm that price is trading back into the range, we want to look for our entry function. Our final step is to apply the unicorn entry function, and once we see it appear on our chart, as close to the stat map level as possible, we want to execute out of it. Okay, so for this first example, I want to check one of the days that the model played out. So first of all, we want to see, as I said, we want to see price trade inside the manipulation range. So that's gonna be our manipulation range. Okay. That's the main range. And we want to wait for price to tap into one of these levels. In that case, we're gonna tap, we have Asia session highs intact, and we're gonna tap into plus manipulation. So we tapped into plus manipulation. If we go down to M5, it will be much cleaner. So a London session starts, and we got a manipulation move, taking liquidity and moving into the plus manipulation level. So in that case, we have that manipulation here, and that would be the manipulation move plus tap into stop map level. So we just tapped into the plus manipulation level. We reacted out of it. We have a liquidity sweep. So we have a rate. Okay, so if we want to mark out, in that case, taking liquidity from this high, we want to mark out the breaker. Sorry, that would be my breaker. Also, we have a fair value up here. So in that case, we have a unicorn. Okay, so now that we have our manipulation, the stop map level has been hit, we have our entry function ready, we wanna buy. In that case, we can do two things. We can wait for price to close above the breaker and on a retest buy, or simply as soon as we see a candle close above the breaker, just buy into the market order. And my trade would be something like this: price below the breaker, a few ticks below the breaker, and then aim for 2R. In my case, we have Asia session as probably our draw liquidity, so we can mark out this high that would make sense for us to trade. This example, I chose this example because it's clear what's gonna happen, but you can check that trade. I shared that trade or that chart on my X page with many others that I've just told myself, so you have plenty of examples there. And then we want to see what price does. So in that case, it gave an entry here on the top of the breaker, and we got a reaction out of it, and we reached our draw. So we could have got so far, if we aim for that high 2.5R, I play to R and place my stop loss under, and that would be the trade. It's quite simple. You can play it without bias or just take the ones aligning with bias. In my case, I try to aim for Asia session highs and lows, and try to look for smooth edges. In that case, we don't have smooth edges, but anyway, Asia high was a good draw on liquidity. We went higher, I think, this day, but yeah, you can see after taking Asia session liquidity, price just kind of consolidates in here instead of expanding, and yeah, that's an example. Okay, for the second example, I wanna show you another trade. This time, one for PM session. So we already had quite price developed already into the day, so we traded that would be our range. So that's our main range. As you can see, we traded above. We kind of not consolidated, so we didn't accept into the new range. As far as we can see, we traded back below. Price tried to move again up into the minus manipulation level. So at this point, what do we expect? Or we try to play the short. That is also like something that you could maybe see. So that would be manipulation, consolidation, and then some kind of play right here into the other range, into the other side of the range. Or if you didn't catch this move and you wanted to take a trade inside this manipulation range, this main range, you'd expect price to reach to plus manipulation and see if we get some sort of reaction. So if we didn't play the short, we would have wait, and we see how price taps into minus manipulation. Okay, and here we want to check price, what's price is doing. So we have smooth edges above. If you don't know how do I use smooth edges for my draw on liquidity, you can check my video, but I usually don't exit my positions on the smooth edges, but I use it for a reason, for price to move towards a direction. So we have our framework here, and we would want to see some sort of displacement and into the upside. So we have that move trying to move into the lower range, the minus distribution range, but we have the displacement we wanted to see with that piece of manipulation right at the plus manipulation level. So you can clearly see and spot that this is the manipulation trying to tell us that price might go one to minus distribution, but instead of just keeping going higher or at least consolidating below the minus manipulation, we have this big displacement upside. Let me zoom in. We have that big displacement, 1, 2, 3, 4, 5 candles green, displacing through that case. We have here a breaker block. That would be our breaker, and at the same time we have one FVG here and we have a little one here. So that would be our entry function. And the same way as before, we would want to try to play the trade from so in that case the entry would have been in this down candle, since that one closed already above the breaker. I'm gonna just tap into the buy button here and move my stop loss below the breaker, and my TP. Personally, I found that 2R is the best for me to play this kind of trades. So we're gonna place 2R on that one. Same way as I said before, I took this trade in my funded account. You can check that same example on my X page with the trade labels and everything, so you can see how did I see the trade. But I opened my position on that low down candle, aiming for 2R and just waiting for price to hit. And as we can see, we tapped into the daily candle open. I don't usually use that level for my trades, but when we have a confluence like that might take profit, or like any kind of confluence that price might react from that open, it's also useful to take it into consideration. So that will be my second example into the 1 minute time frame. The other one was on the M5 time frame, and as you can see that the trades look almost the same, just different time frames. But if you just don't want to play the M1, you just could wait for the M5. In that case, the M5 doesn't give us any kind of well, we could use that green candle right here as a breaker, even though it's actually not on the M5, and it would be the same exact trade. But yeah, if we wanted to wait into an M5, that one and just play a nice breaker, we basically didn't trade that one, and that's it. So yeah, that's the second example, and as you can see, it looks actually the same as the previous example. With this video, we have covered the StatMap Unicorn approach. You will be able to find more examples in my X profile and previous YouTube videos with live analysis and executions using the StatMap. Hope you found this video useful, and make sure to type any questions on the comments. Also, you can download the full StatMap Unicorn document for free on the link in the description below.